muted.
I can hear you, but I'm not done dealing with my 9-year-old. So just wanted to get signed in, and I'll be back.
Understood. All right, so we may have a couple people added in later, but you know, as you guys know, we try to keep these meetings to an hour, so I would like to get started. And we're fortunate to have both Travis and Josh from TribeVest here, and you know, they'll tell you what TribeVest is. I'm in three different tribes. It just makes it easy to invest with other people. And, you know, I think when we started this group, our goal wasn't to have people necessarily invest together, but I also thought I would be pretty shocked if people didn't, just because, you know, it's hard to invest in multiple syndications if you're, you know, the minimums are 25 and 50 grand, and maybe you want to do more than a couple a year, you might want to team up. So I'm thinking about teaming up with a couple more just to get in more deals. So because of that, I wanted Travis and Josh, who are the founders of TribeVest, to come in and just kind of tell their story and tell us a little bit about TribeVest. And guys, as I said, I'd like to keep it to about 15 minutes, and then if the gang has questions, we'll go with questions. So I'll turn it over to you guys.
Perfect. Thanks, Jim. Hey, everyone. Thanks for having me on this call. I want to invite to your next group that you pull together here, Jim. It's awesome, the work that you're doing. And again, thanks for the opportunity to introduce myself. And also on the call, who will be chiming in here soon, is Josh Wilson. I'm the founder and CEO of TribeVest. Josh is the co-founder and COO. And I think we're just going to keep this really casual. I put together a little deck, but I think it's going to be easier if I share with you a little bit about TribeVest, where we come from, and then really diving into a demo. I'll have Josh pull up actually his tribe, and you guys can see it firsthand on what TribeVest is and how it helps you achieve your goals. But so again, my name's Travis Smith, founder and CEO. TribeVest is a collaboration platform that happens to make it 10 times easier to form an LLC, 10 times easier to open up a business FDIC insured business bank account, and makes it 10 times easier to set up automatic capital contributions with your tribe. And the story is personal, and why our mission is to help people come together to invest or to achieve more together. And it goes back to 2008, which you guys might remember when that was, but it was the you know, financial crisis. And my brothers and I were on a fishing trip, quite honestly, one that we couldn't afford. We were new to market. We had good jobs. And whenever we got together, we talked about building wealth together. We talked about going into business with each other. And we kept on running into, you know, the biggest barrier for all of us, and that's capital. And we had good jobs, but we didn't have lump sums of capital that it required to break into real estate. And we didn't have any real estate experience. We didn't come from a real estate family. You know, there were no groups like this one around at the time. There weren't podcasts really to listen to. You could read some books like Rich Dad, Poor Dad, which was certainly influential to us. But so there was less resources, but that was part of it. We wanted to come together and grow together and learn together. So we kind of like this idea of investing in real estate and learning along the way. But again, we kept hitting the same barrier, which was lack of capital. So finally, over a few beers on the last night of the fishing trip, we had our breakthrough, and we said, listen, guys, let's stop talking about real estate deals and let's solve the real problem. And we finally agreed to $500 each a month, which between the four of us was $2,000 a month and $24,000 a year. Now that was a stretch for us at the time, but it was manageable. And one investment led to another, to this day, we still only invest $500 a month. Every once in a while, we'll throw in a lump sum to get a deal done. But we look back and we've built a multi-million-dollar investment company that has changed our lives. And it wasn't long ago that people started asking, wait a minute, how are you investing in those deals? And we shared with them our story. And then it wasn't long that people started saying, wait a minute, I have a tribe. We have shared financial goals. Can you help us form a tribe too? And that was really when the idea was launched. And we went out and had to ask ourselves, gosh, what would we have done differently? And the answer was a lot. We would have done a lot differently, a lot of hard lessons along the way. But now we've built a platform where you can come in, you can create and configure your tribe and your tribe vision. You can send out an invite to your tribe to collaborate and to align, and then agree on what's your goals, how much money do you want to pull together, and how fast. And really what the magic is with TribeVest is we're a neutral third party. We make it easy for you to come together and to do these things. So yeah, with that being said, I'll just talk about a couple applications. I'll field a couple of quick questions maybe while Josh pulls up his demo or his tribe, and you guys can ask questions and we'll see where this goes, and excited to do that. I'll touch on this, just a few applications that our tribes are coming to TribeVest for. A real popular one, as you might imagine, is vacation homes. So almost a third of all vacation homes are bought with friends and family. So we're a really nice platform for them to come together and to mitigate the emotion that comes with buying with friends and family. And then, our biggest area is investing in real estate. So and that's in single family rentals. So we have neighbors coming together to buy a property that came available in the neighborhood or on the block, and going into business with each other that way and doing multiple deals. We have people that had experience in single family rentals on their own. And the tribe was a great way to come together and dip their toe into multifamily deals. And then a real growing application, which is the one Jim, really identified here, is participating in syndicates. So do you want to get over a threshold that, maybe you don't want to bite off $25,000 or $50,000 or $100,000? Well, if you go in with the tribe, you can get in on some of these deals, form an LLC, create your EIN, get an operating agreement, open up a business bank account, pull your funds in a automatic ACH way, and get into deals that you wouldn't or couldn't on your own. And then we're seeing, people like Jim who would have got into, I don't know how many dozens of deals on their own. But now they're getting into twice as many. They don't have to say no to deals that they really like, because by investing with their tribe, they can access more deals together. So with that, I'll pause, answer a couple of questions, and I'll let Josh take over and give a little bit of a demo, a run through.
So Travis, thanks for jumping on and educating us more on this. Sadly, I haven't looked into TribeVest very much. Are you guys mostly a tool to help build the capital, or are you also finding deals that TribeVest groups can invest in as well? Just curious what all you guys bring to the table.
Yeah, thanks for that question, because I think it's a super important one. It's important that I kind of answer that. First of all, I think I want to point out, we didn't invent tribe investing, right? As you guys know, we've been doing it for decades, centuries, and even since the beginning of time, we've been coming together to do more. So anyway, it's not a new practice. It's always just been an antiquated practice, and therefore, not leveraged as much as it could be or should be. And that's what we like to think about TribeVest helping with, is making it super easy and inexpensive for people that have an idea, that have found a deal, to come together and streamline that process of pulling capital together. And to answer your question, Dan, I think it was Dan.
Chad.
I'm sorry?
It was Chad.
Chad, I'm sorry. Chad.
No, that's okay.
That's really what we do. And we don't get into deal flow. We don't get into suggesting deals or anything like that, because we really want to stay this neutral third party. We say that our job is keeping the relationships the priority. And what that means is let the tribe worry about the return on investment, all the fun stuff, right? Getting the deal, winning. And by virtue of using TribeVest, you're making sure that you're agreeing on the rules up front. You're setting those expectations up front. So really, we're just focused on the health of the tribe.
Gotcha. Thank you.
All right, everybody, I'll do a quick demo here, and thanks for having us on this evening. So, first of all, can everybody see my screen? Good. All right, very good. So, actually, so this is the tribe dashboard, and I actually belong to this tribe. There are 11 people in this tribe, hence the name, 11 partners. A couple of people on this call are also in this tribe. Jim and Jeff Geegan are, Jim Pfeiffer and Jeff Geegan are in this tribe as well.
Yeah, Josh, if I could just briefly interrupt, there's also Annette is usually on this call, and so is Ross. So there's actually 4 of us.
Very nice. So we'll quickly go over here what you see on the dashboard. So here in the middle of the screen, you'll see the collective balance of our tribe. Off to the left of that is information that is relevant to me. So my contributions to date, I've put in $1,200 so far. My monthly recurring contribution is $100. You can see down here the scheduled payments. We currently have a $1,400 lump sum payment or lump sum contribution that is in process. And then my next monthly contribution will be August 15th. Each one of the pies represents a group member. So if I hold it over here, you can see there's Josh. He's donated or contributed $1,200, which gives him 9% of the company. You see all the members up here. Here's our mission. Looking for alternative investments. That's all customizable and can be adjusted for you guys. So when it comes to funding, we have what we call funding rounds. And you can see if I click in one of these funding rounds, it shows me all the members who are involved in that funding round, when that funding round was started, how many months of that is the duration of that funding round. So we set our first one up for 24 months. We're 13 months in, or I'm sorry, there's 13 months remaining on that this funding round, and so far we have collected 12,000 of the 24,000 for this round. Like I say, we're also doing a lump sum contribution. You say $1,400 a piece, and the 11 members who are part of that. Now, we also added a member later on who needed to do a catch-up payment. So you can see here, Jeremy's catch-up payment. So he was able to do a $1,000 catch-up payment to get caught up with the rest of the group, and then here's his monthly contribution to keep him current with everybody else. So you can add members at different times and just set up lump sum or other funding rounds for them to get them caught up. So here is the voting. You can see all the funding rounds are put up for vote. Our group is a majority rules group, tribe. So therefore, you can see here, when we brought Jeremy into the tribe and he had to do his catch-up contribution, it took 6 votes to pass. You can see which members voted and how they voted. And that automatically put that funding round into action.
Awesome, Josh.
We also,
I just wanted to, I just wanted to do a little time check and, yeah, make sure we have some time for questions too.
Excellent. And just one other thing here I'll show you. We have filed for our LLC, and we are currently in the business bank account setup process. Filing of that LLC was all done right here on the platform. Here you can also see our cap table, which contributions of everybody. We'll be updating the equity here soon once the operating agreement, LLC, and business bank account have all been set up. One last piece is business bank account. Once we have that set up, ours, like I said, ours is currently being set up. It will be displayed here. So all members, even if they do not have access to transact in that account, will be able to see the transactional history and account balance at all times. Thank you.
Awesome. Awesome, Josh. Yeah, and just to point out, you know, what you're seeing right there is actually an escrow account. So what TribeVest gives people, the tribes, the ability to do is to come together on an idea and agree on it and start to pull capital so that when opportunity knocks, the deal knocks, you're ready to answer it. And then TribeVest can help you quickly form that LLC, pull all that money into from the escrow account to the business banking account, and you know, get the deal done. So anyway, just wanted to kind of point that out as well.
And if I can jump in, one of the nice things about the way this is structured is, you know, we've been saving money for almost a year in this tribe, or maybe a year, and we've just been dating. So we've had some meetings, we've got to know each other, everyone's putting money in. Now we're about to get married. So if someone wants to take their what, $1,200 and run, now's the time. You know, tomorrow or whenever Josh pushes the next button, it's going to be too late. So it gives us a chance to just invest, have a few meetings and see if you like how it's going, and then you can pull your money back out and no harm done. So it's a nice little feature if it's a group that started like ours did.
So the rounds for investments, is that something you set up at the beginning to say, okay, everybody agrees on this first round of 24 months, $100, and then you will vote on another round and everyone is absolutely in that? Or do people bow out at that time and say, oh, I'm good? What's the exit like for something like this?
Yeah, great question. So, you know, like Jim was saying, during this escrow stage, which is really what you see right here, and I think tomorrow they really are going to get married and they'll be in that business. You know, they will have now formed an LLC and, you know, signing up for, you know, certain commitments. But, you know, all the way up through this escrow and all the way up to that point of saying, hey, it's time to form a business because there's a deal that we want to get done. But prior to that point, an exit's pretty easy. In that you just pull your money out and no harm, no foul. Now, you're going into this agreement with the intention of moving forward. So you want to qualify this as much as possible so that doesn't happen. But if it does, it's not messy. It's very clean. And then as Jim said, once you do get to this point of, hey, we have a deal and we want to get a deal done, it's time to form the LLC. You do get married, And then what that exit looks like is detailed in your operating agreement. So are we going to agree to, continue to invest and, reinvest our profits into this and keep doing this again and again? Or are we going to do one deal and, distribute the profits after we liquidate? And again, those are all things that the group makes as a decision, makes as the decision that the group makes together.
And as an example, sorry, Brian, real quick, is Ryan Stieg, who's also sometimes in this group. He and I are in a separate one with his brothers and dad, and we're doing them 1 year at a time. So we're forming an LLC. We're gonna do it for a year, invest in a bunch of deals, and then at the end of the first year, we're gonna say, you guys want to keep going, or are you done? And so if they're done, then we'll start a new LLC with the second group that wants to keep going, and the deals that you invest in are just gonna have to roll off as they do. So that, I mean, it's just like if you were starting an LLC, you're committed and there's ways to get out, but those deals you invest in are going to have to roll out. So it's a long-term commitment for sure.
Yeah. And I guess my question was more on the, the agreement up front of how long you're going to contribute. So it sounded like this one was a 2-year commitment. Is there a commitment after that? It sounds like there may be if you structure it so that you say, hey, majority vote, if, for the next round, if the majority says we're going to do, $500 a month for another 2 years, that's what it is. And you're committed based on what that operating agreement, what you signed up on.
Right.
Okay.
Yeah, that's true. Unless that decision came before the business was actually formed. And in that case, you would have a clean out. But yeah, once you did get married, and in this case, it is majority rules. And if the group decided to do a capital call, you would be in on that. But, I think the real spirit of this, guys, and I know Jim's tribes really capture it. It's learning and growing together.
Yeah.
It's social. It's fun. And that's an important kind of prerequisite before using TribeVest is, does everybody have the right mindset going in?
And it's, like I said, I'm in 3 tribes that are completely different. The one that Josh is showing here is a beginner tribe to learn about investing. We're working together. I'm in another one with 2 guys who used to be my, clients. They're also neighbors, but they don't do anything. I just pick an investment and say, hey, guys, put some money in it, and they say, okay, and off we go, because they don't want to have anything to do with it, but they want to invest in real estate. So it's a totally different relationship than this one. So you can set that all up front. So that group is 3 people, 3 votes, has to be unanimous, because I don't want anybody putting that kind of money in something they don't want to. This group, we're putting in $100, a couple lump sum. We have 11 people, so it can't be unanimous. So it just depends on how you want to set it up. And they do a nice setup at the beginning when you start TribeVest of kind of making sure goals are aligned and that everyone's kind of on the same page. So it makes it nice and easy to kind of join the group.
Hey, Jim and Travis. So what are the costs associated with some of these things? Like, for example, do you have an attorney always setting up the LLC and also drafting the operating agreement? And then also what is the cost associated with TribeVest as well?
Yeah, great question. It's $5 per person per month or per member, and it's free up to the point where until you form your LLC and open up your business bank account. And then we do have a law firm integrated into our technology. It's actually Legal Inc., which is owned by LegalZoom, and we can file your LLC in all 50 states. And then we also do have services where you can get additional services of attorney document review, and we highly suggest that. When it comes to the operating agreement, we continue to work on tools that help you configure your operating agreement. So what are the 6 or 7 things, how much, how long, then what, and then, what's next, and helps the tribe kind of configure that on their own, so that when they do a document review with an attorney, they're not spending $2,000–3,000, but they've done it on their own, and they've got the agreement 95% of the way, and can do an attorney document review for a few $100s, which
Gotcha.
also can be facilitated through TribeVest. And you're probably wondering, well, how are you guys staying in business, in such a low cost? Well, we're doing this at scale, and also a big part of our future business model is connecting our tribes to other business services, legal services, accounting services, insurance services, should they need it, depending on their application.
Great, thank you.
Any other questions for these guys?
Just a real quick one. How are the K1s done? Because I can't imagine a syndicator is going to give out 11 K1s for someone's, invested $3,000 or whatever it is into their syndication. Do you have to have an accountant to do that separately?
Yeah, great question. And no surprise from this group, but no, your syndication you'll get one K1 from the syndicate, and then really, as an individual, you'll be getting that K1 from your tribe, from your tribe LLC. So yes, and we do provide reporting to help you to give to your attorney, and then ultimately, someone will have to do 11 K1s once you guys, once this tribe, for example, is at that point. And
Steve,
again, those are one of those services that we're looking forward to helping with in the future. And just the kind of let everybody know where we are. We appreciate all the members here. Really, they came in early on this platform. It wasn't much risk. Everything's FDIC insured up to $250,000, but the user experience hasn't always been all that great. But we're at an exciting point now. We just got a big investment from a venture capital firm in Los Angeles, and it's getting exciting. So anyway, the user experience and different tools and everything are going to continue to come in the months and years to come. So what you're seeing is really just the beginning, but it's the core. It's always going to be the core of what we do.
And to the K1s, Steve, we did this last year with my group of 3. And I think my accountant charged $400 or something we got K1s, and then he did our tax return. He charged like $400, and he sent out 3 K1s to the group. So it might be a little bit more with 11, but the thing is the tax return is so easy because all you're doing is, let's say you do 5 investments that year, you have 5 K1s to deal with, and you knock it out. It's not real complicated. So it'll be interesting to see with 11 K1s how it'll be. But eventually TribeVest will probably have a cheaper way to do it. I can get an LLC from my attorney, but the TribeVest one is cheaper. Eventually they'll have accountants that'll probably do this kind of stuff for cheaper than we can get our accountant to do it. But we'll as both these guys said, we're growing with this, and the website is 10 times better than it was at the beginning. Full disclosure, I'm also a minor investor in the company, but I'm not trying to push anyone on it. I'm in 3 tribes, so obviously I think it's a good thing. And there's, as I said, 4 people in this group who are using TribeVest. So I encourage you, if you're interested, to talk to some of the other guys and see what they think. Anything else, guys, before these guys sign off and we continue our meeting?
Really interesting stuff. Thanks again for the info.
Yeah, and I'll just offer it up, guys. Josh and I will follow up with an email, or maybe Jim can send it out, but please reach out directly to me or directly to Josh. And I think that's what we'll offer this group. Anybody that ends up forming a tribe, we'll give kind of the platinum service, which is a concierge service, where you get access to Josh and his team and me too. So anyway, just wanted to make that offer. And again, don't hesitate to reach out with any questions. We love talking to our customers.
Awesome.
Absolutely. Thanks, everybody.
Sounds good.
Thanks,
Thanks,
Josh.
guys.
Thanks, Travis.
Thanks, guys.
Mhm.
Bye,
See you
everyone.
guys.
Thank you.
All right. All right. So hopefully that was helpful to you guys. As you know, with anything else, I'm just trying to help connect people to stuff. I'm not trying to push this, but I'm in 3 tribes, and I keep thinking, man, maybe I'll do one more, because so many deals are coming across the desk right now that that I want to be in, but I don't. 50,000 minimums at a time. There, you just can't do them all. And maybe I shouldn't be doing them all. But if people are interested in forming groups, I think there's a lot of like-minded individuals on this call. So that's something that we can talk about, whether you use TribeVest or not. That's a different discussion. But investing together, I think, could be part of what this group does. Anybody have any other comments on that now that the guys are gone? No? All right. Well, we can, as I said, as we network and get to know each other, if people want to start up investing groups, that's one option. So on the agenda today, also, now that everyone is here, signed on, I just want to again introduce Paul Shannon. He's Kelly Shannon on the screen, but Paul, to you and me. He used to live on my street. We've been talking. He's gotten into real estate and he's been killing it. Quit his day job, owns a ton of units, and is just getting into passive investing. And so I asked him to join our group because he's invested in 2 deals, I think, in the last week. So he's jumping in with both feet. So welcome, Paul. We're going to put him on the spot in a minute. Thank you. But I wanted to go over some sponsor calls, and I think part of this group is we really want people to go out and make a few calls and talk to some sponsors. It is really, really helpful to just ask the questions. We've got the the sponsor call spreadsheet, so you can use that to kind of get your way through. The call will take a half hour, and then you can share the information with the group and just figure out if this is something you want to do. And a lot of the guys on the call have been doing that. So we all met Matt Paceni when he was a host here, but Mark, there you are at the bottom there. Mark is offered to kind of talk about his call with Mark, and also I believe, or with Matt, sorry, but you've invested in his latest deal as well, right, Mark?
Right. Yeah. So, thanks, Jim. And thanks, guys, for working on the spreadsheet. The guys that did that, actually used that before I finally wired the funds, and also filled out all the questions, corresponded with Matt with some of the questions that weren't answered in his presentation. So in his executive summary. So thanks for all that. And honestly, I had never invested in a syndication, so this is my first one. So I'm kind of excited just to kind of see how the process works. And but anyway, the phone call was good. Obviously, listened to Matt's presentation, was intrigued, gave him a call, and then I'll go ahead and just say, let me just share my screen real quick. I can show you what the property looks like. So let's see here, right here. So it's a 419 Class B multifamily project in North Dallas. And what really got me excited about it is just when they were going over, well, for one, just the guys that are the key players in the syndication, just an extremely successful group of guys that have a ton of experience, have like over 10,000 units that they've invested in their portfolios. So a ton of experience. And then also too, just the location got me really excited too. Just the growth statistics, the economic statistics. I mean, it's just like daily there's a person every 3.6 minutes that is there. So 401 people per day, 2,812 people per week. So it's just exploding. And so it was pretty cool. I think they said it's soon to be the third largest city in the nation. It's going to overtake Chicago probably within the next 5 to 10 years, or I think 10 years they said. But anyway, so and then also too, their underwriting, asked a ton of questions about that. This is the spreadsheet that Jim and you guys, some of you other guys worked on. And just everything looked really good. I'll just go over a couple, like the internal rate of return, 14.9, average annualized return, 17. And so one of the downsides of this, and actually I'm kind of kicking myself because I didn't know anything about TribeVest, but it was a minimum $75,000 on this, which is pretty steep. But had I known about TribeVest, I could have done it for probably a lot less. But anyway, things went really quick. This was a really popular deal, I guess you could say, and it was funded completely within 72 hours. And so now, it's just wait list only. So I had to pull the trigger quick, but everything looked good. The numbers looked great. And obviously I can keep you guys posted on how it performs.
That's great. Did anyone else invest in this deal?
Yeah, I invested in that too, Mark.
Oh, did you? I'm sorry, Steve. I didn't know that. Okay.
Yep. So I kind of pulled the trigger. Actually, I for the first time, I actually took money out of my whole life policy and used it to fund that. So I'm kind of excited about that. I see Jameson smiling over there.
I saw that too.
But no, I've got some some cash value that I use. So I was excited about the deal too. And 100% of the units were classic units, meaning they have not been renovated. So I was like, well, there's a lot of room for improvement there. So
exactly.
And I ran the numbers as well. I asked him a few questions. So no, I'm excited about the deal. And like I said, I was in his other deal from 2 years ago, and that's on the market already. So that hasn't sold yet, but I think they've had like 60 some inquiries into it already. So,
great.
So I have a lot of trust in Matt.
Yeah, I do too.
And he's really, I think, pretty conservative at heart. And like, for example, their exit cap rate was like 2 percentage points higher. Mm-hmm. So they bought it at 4.7. It was like a 6.5 is what they were calculating at the time of sale. And even at that, those are the numbers that they put in their underwriting. So if it's less than that, it's going to be obviously much higher, and then you'll probably get out earlier too.
Yeah.
And if I can get to my presentation, if we have time, I'll show you how conservative it is.
Good. Yeah, and one more thing about Matt and many other of these syndicators, Mark, the one thing that was holding me back on that, well, two things was I didn't like the $75,000 minimum.
Right.
And I have enough in Dallas already, so I wanted to diversify a little bit. But I talked to Matt actually today, and I said, I'm hoping he gets another Kansas City deal because that's a place I'm not in. And I'd really like to get in Kansas City. But if the minimum is too much for you, or not too much, but you're uncomfortable with it, you can always ask and talk to him and say, hey, my first deal, can I get in for less? And almost all the deals that I've asked for, especially if it was my first one, if I could get in for less, they've allowed it. So it's not a bad conversation to have. Now, if their minimum's 25, they're not going lower than that. But if it's a 50 or 75, a lot of times you can get in a little lower. So don't be afraid to ask that question.
To be honest, I actually did. And he was okay at 50, but I don't know. Like as I ran the numbers, I looked in the deal more. He was like, he said he's going to try his best to get me the deal, and he probably would have,
Yeah.
But after seeing what I saw, and I was just like, I'll put the 75 in because I really want to be in it. So probably
that's good. Good for you.
Yeah. I actually did invest. I asked him, and he allowed me to get in at 50. Okay. But I think that kind of helps that I invested in his prior deal, and I'm an investor with his wife's, her Broadway show and that kind of thing too. So I think that kind of helped out.
Right. Yeah. And one more thing, Jim, too. And then also too, there was a bit of a kind of a vested interest too. I've been talking to him about looking in the Columbus market as well. And he's interested in like sponsoring and partnering as a general partner with me on something in the Columbus area, which by the way, I imagine most of you guys are familiar with Brad Sumrock. So he had his race to retirement a couple weekends ago virtually. I paid for the ticket or whatever. And his sixth best market in the nation for 2020 is Columbus, Ohio. And so that's a guy that's extremely successful, obviously does all of his research and some, has an extremely successful team around him as well. So, and he's got a property in Columbus as well. So all that was pretty
interesting. He's got 3 in Columbus.
Oh, he has 3?
Oh, no, 2. I'm sorry, 2. Okay. He's partners with Kenny Wolf.
Okay. Yeah. And so, all that, because I'm interested in passive investing, but I'm also interested, at least I'm trending towards perhaps, being more active as well. So that was
cool.
That was interesting.
Well, that'd be great if you guys team up on a deal in Columbus. I'm definitely in on that. That would be awesome. That's great.
Yeah.
Well, thank you.
That's kind of like, that's my goal.
Awesome. All right, so next we'll go with Jeff. I think you were talking about Praxis, which is also a deal I'm in. So I love Praxis, so I'd like to hear what you have to say there, Jeff.
Yeah, I'm glad you're in it too, so you can correct me if I misspeak, Jim. But yeah, so this was my first investor sponsor call, and it kind of shifted gears because they were launching a new fund the next day, actually. So instead of maybe your typical vetting, I spent my 30 minutes with their investment director, Bob, just talking through what their new deal looks like. And it's actually a little unique. And a step back on Praxis, a lot of you guys might have heard Jim promoting the book by the CEO, Brian Burke, The Hands-Off Investor. I crushed that, I think, in a week, and it really got me excited about doing a first deal, and I kind of was sold on doing the first deal with Praxis. So when I did this, I kind of read the book and thought I was going to be able to do all the great analysis that Jim had created with others on the spreadsheet, but actually they're doing a fund. They're doing a big raise, so it's a $25 million fund. What that looks like is it's multi-state, and I think they kind of explained on the WebEx that they were just running into too many problems of people getting closed out of deals on these single asset syndications. So they're going to do a big raise. They're probably going to try to buy maybe 5 to 10 properties in the next few years. And then there will be an exit. At some point, they'll run out of money. They bought so many properties. And then eventually all those properties will probably be sold in a 5 to 7 year time frame. I like Praxis from the one statement that they made is being one of the longer tenured groups out there. I think they got their first fund started in 2002. They've been through the Great Recession. They've never lost investor capital, yet with 7 of the 9 of their funds going full cycle already, their IRR averages were between 16 and 25%. So never lost investor capital, initial investment, and then still having pretty good IRR rates throughout that track record was pretty impressive. So I think one of the challenges with them is they're known and they do command one of the higher minimums. They're at 100K. But like Jim said, being new, you can ask for the rookie favor, and I was able to get in at 50K. So that was good. The other, I think, challenge with this being a fund is you can't do analysis on the deals. They said, we'll be very open with what we buy, and you guys will share it with you, and you can look at it, but you're kind of looking at it after the fact. You're giving them, your commitment, and then they're going to buy, and then they're going to show it to you later. And I think the other thing that was kind of interesting is, and I think Jim's invested in this, is they also have another product called their debt fund. And what they offer through a product where they give short-term bridge loans out, they offer an annual 6% rate on this debt that they loan out to, I think it's hard money lender loans, Jim, if I have it right. They basically say they sell it in like 3 days, so it's off their books very quickly. Obviously, nothing is 100% guaranteed except for a checking account, so you can't say you can't lose money in it. There is some risk with that 3-day carry, but it's pretty good. And that is independent of whether you invest in their future funds or single asset syndications. You can just have this on the books with them. I think they think you're going to eventually invest it with them. It's also good for future investments. So whatever you contribute to the debt fund, you can later use those funds to carry over into future projects that you get excited about. So that's exactly what I did. They actually have a $100,000 minimum on the debt fund. I was able to say, hey, can you do anything? Can I put 50,000 that I'm going to put into your fund over the next year or two into the debt fund and take it as it goes. So they did the rookie 50,000 K minimum for that too. The other couple points, their purchases, they're targeting the West, the South, the Southeast markets. And the other challenge I was thinking of, Jim, is they can't really say where they're going to buy properties. So they could buy many different properties in states that They do have income taxes, so you probably could get several different types of tax returns that are needed if it's not all done in Texas, where it's a no, income tax state. But other than that, I think those were my notes. Oh, and they do accept accredited and non-accredited investors, except for in the two deals that I mentioned, the debt fund and the value fund. Those are specific to accredited. And I don't know if the value fund is still open or not, or if they closed that out. That was a call we had last week. And maybe I'll let you fill in, Jim, with anything I left out.
Yeah, thanks, Jeff. That was great. So the way I did it was I talked a while ago to Bob, and I think it was my longest conversation. It was over an hour. I took 4 pages of notes, and I just thought they were great, especially with that long track record. And so I knew I was going to invest in their next deal, but I didn't know when that would be. So I put 50 grand into their debt fund, because you have to keep your money in there for a year. It's kind of like AHP, if anyone's familiar with that, where you have to keep your money in there for a certain amount of time, and you get this one you only get 6%. But I knew I was going to put money into one of their deals so I could keep it in my bank account at nothing for a period of time, or give them 50 grand and they'd pay me 6%. Until they came up with a deal. So when they came up with a fund, what they let you do is they just let you, when they don't take all the 100 grand is what I put in to the new fund that Jeff was talking about, but they don't take it all out at once. They're going to take 2% at a closing date, and then whenever they find a property to buy, they'll take a chunk, and then they'll take the next chunk, the next property they buy, and it could take up to 2 years. So now I'm going to have 100 grand into their debt fund that's going to pay me 6%. And whenever they need money, they're just going to take it right out of there. So I don't have to set aside money in my bank account and with no interest, and just wait for them to, make the capital calls. I don't like I don't like these funds at all. I would rather underwrite the deal. We made this fancy Excel spreadsheet, I want to use it. But the reason I did this fund is because I read the guy's book and I loved it. I talked to their investment relations guy for an hour. I talked to him again about this fund for another hour. And I just really have confidence in these guys. And the reason they're starting a fund rather than doing individual deals is because they think there's going to be opportunity because of COVID. There's going to be deals that come up that might not otherwise, that might have a lower price. And they want a war chest so that they can go in and close quickly and have a huge advantage. Because they said, if they have to go to the guys and say, look, we got to raise money, even if you have a good record of raising money, it's a slower process than competing against some of these other guys that have big funds. So that's why they wanted to do it. And that's why I signed on to it. So I'm pretty excited about that. And I'm glad you got into it too, Jeff. So I'm not sure if it's open or not, or if anyone's interested, we can talk. But I would at least look into Praxis in case they do have some single buildings that come up in the future. They're just a really high quality, and the long track record is something you're not going to find. So any questions on that for Jeff or for me? All right. So just so, Paul, you don't have to rush. I hate to do it, Steve, but I think we'll have to push your I know you did all your homework. We're probably going to have to push you to next time if that's all right.
No, that's no problem.
Okay. So, Paul, take your time, and you're going to talk to us about MAG Partners, right?
Correct, yes.
Perfect.
So thank you, Jim, and thank you guys for the opportunity to be in this group. Jim forwarded me some information, and just a little background on myself. I spent most of my career in medical devices and sales and management, and was traveling a whole lot. Was looking for ways to, basically find other sources of income, whether that be passive or active, and got into buying distressed properties at foreclosure, fixing them up, adding value through the rehab, filling it with a tenant, and then refinancing it. I did that a couple times and felt as though I could scale it pretty quickly. So I left my W-2 job at the beginning of last year and have been doing this ever since. But I've been attracted to syndications for some time. I've been doing quite a bit of homework on it. I just did sign up for my first couple deals. Thank you, Jim, for the kick in the rear to get me motivated and moving in the right direction. But what attracts me, obviously, is probably the same things that attract you guys, all the benefits of real estate with the passive side of it, not having to be active, and then diversification amongst asset classes, but also in different markets. I really wanted exposure to the Sun Belt. Most of my business is here. I'm in Indianapolis, and I've been here for the last 6 years, and I do a lot in Evansville, Indiana as well. So it's Rust Belt, not high growth, good cash flow, not a lot of appreciation. And I really wanted to partake in some of the hotter markets and the net migration that's taking place right now from the Northeast and California, other areas of the country down to the South. So as it relates to the deal, I spoke to Drew Walgren the other day from Mag Capital Partners, and I really enjoyed our conversation. He's a really down-to-earth guy, very relatable. A little bit about the sponsor. Drew's the actual investor relations guy. The company was formed by a guy named Dax T.S. Mitchell and another guy named Andrew G. back in 2015. They're out of Fort Worth, Texas. Their portfolio is comprised entirely of industrial and office, a mix of industrial and office buildings, which would include warehouses, distribution centers, et cetera, et cetera. They buy these properties and then they lease them right back to the tenant via a long-term triple net lease, typically 10, 15 years. And this particular deal I'll talk about, they've got 2 10-year options at the end of the 15-year term. So very long tenants that have a track record. They look for mission critical properties, quote unquote, and by that they mean basically ones that are sticky, hard to get out of. The building is customly designed to fit the operations of the tenant, so it would be difficult for them to leave. And they've got a very good track record as well. They've got 12 dispositions now, 22% average annual return. So what I thought was interesting about this is outside of my realm of knowledge. Not only do you have to underwrite the actual property itself, but you also have to take a look at the tenant who's in the property and hope that they stay long-term in their operations and balance sheet. And then in addition to that, this particular deal has a private equity firm involved as well. So a number of factors to consider, but a little bit different than the value add that I'm used to seeing. And I asked that specific question to Drew, is there a way to add value in these types of deals? And he said, yeah, absolutely. It's through establishment of the triple net lease, because on the exit, they're usually selling to institutional buyers, and to have that kind of turnkey tenant in place with the lease that they can roll up into a REIT, for example, that's something that is kind of essential for a REIT or institutional buyers to have that in place. They're not going to do the dirty work there, so that's the value add piece. So with this particular deal, I'll talk about the company, or what will be the tenant of this property. They're called Marian Process Solutions out of Cedar Rapids, Iowa. Just a side note about Cedar Rapids, it's obviously centrally located to the United States and is a good distribution area to reach a lot of different places. But in Cedar Rapids, they only have a 3% vacancy rate in town for these types of industrial class buildings. So I think that's safety that they're going to be in that building for quite some time if they do stay in Cedar Rapids, which it sounds like they will. Marian Process Solutions is a company that basically does industrial mixing and drying for chemicals, pharmaceuticals, food. So think of like the example that Drew used with me was McCormick spices. They'll grind up all the ingredients that go into the spice, and then they'll add the appropriate amount of water, and they'll mix it all together. There's very specific specifications for food. Obviously, there's the same type of specifications for chemicals and pharmaceuticals. So 3M, Dow Chemical, BASF, these are their types of customers. And they've been around for 82 years and have relationships with Fortune 500 companies for quite some time. So an established business here. 2 years ago, they were acquired by a private equity firm that I mentioned earlier. They're called May River Capital out of Chicago. May River merged Marian Process Solutions with another company called Cason, and formed a company called AMP, Advanced Material Processing. AMP is going to be used on the lease, so that's important. But apparently Cason and Marian had some synergies there. They thought that they could merge and find some benefits. So they're selling the property to Mag Capital to raise for debt restructuring and payoff that comes due in 2024. Marian's about a $15 million company. $2 million EBITDA. AMP collectively, including Cason, is $35 million in revenue, projected to do $46 million by 2024. 6.6 million EBITDA, 18% EBITDA margin. So pretty solid company with high barrier to entry with low risk of moving from the property. I'm going to actually pull up the screen here and show you guys the property, and I can send this PDF to the group after the call. Okay, maybe not. It was a nice thought. I'll share it with you guys afterwards.
All right.
You could take a look at it. But the property itself was built in the late 1960s. It was fully renovated in 2012. There's 2 buildings on the property at that point. And then in 2016, they added a 3rd building for R&D. It's on 3.5 acres. It is a total capital raise of $4.11 million. With only $1,050,000 for equity. So the GP's putting in $300,000. It only leaves about $700 to $750 for the raise. They typically do a $50,000 minimum, but they're doing the rookie $25,000 deal as well. So I don't know if that's. I'm assuming that everybody can get that if they just ask or mention Jim's name. So I hope I don't get them in trouble. But so they plan to sell and then lease back for 15 years with 2 10-year options. What's cool about this is they've got 2% rent growth built into the lease, which is a beautiful thing. They don't have to negotiate that moving forward. And then there's going to be a 4-month prepaid rent up front for just the current environment we're in as kind of an insurance policy for COVID. So what else? A few more specifics. They'll take accredited and non-accredited. Their target annualized ROI for this particular deal is 19%. Target IRR is 16%. Multiple of 2.1. It's an 8 to 10% preferred return for A shares, which there's only the 1 A shares. And they actually bump up every 2 years. So it starts at 8, and then in year 3 it goes to 8.5. In year 5 it goes to 9, and so on and so forth. Their plan is to hold for 5 to 7 years and roll up into a REIT or sell to some other institutional investor. They're going to do quarterly distributions, and it's an 80-20 profit split up until 18% annualized return. And then if they reach that and they go beyond, then the LPs and the GPs split 50-50 after that. They're using 10-year fixed rate debt, and they are doing cost segregation, obviously, so we should see negative K1s for this. As far as fees, it was a little bit different than what you see from a multifamily sponsor. There's a 2% acquisition fee, a 1% loan guarantor fee, and then they do like a 2% asset management fee is essentially the property manager, but they really don't have to do anything because it's a triple net lease. And I did ask Drew, what's the tenant responsible for? Essentially, it was everything: the roads, the roof, anything as far as CapEx. So there shouldn't be any surprises or expenses there. Yeah, I think that hits all the high notes on it.
Yeah,
sorry,
awesome.
I pulled up the screen here.
No worries. Any questions on that? While you're thinking, I just wanted to add, the way that I got exposed to this, Sean and I are both in the 2 previous deals. And the way I got exposed to this guy was a cold call through Bigger Pockets. Some guy just sent me a Bigger Pockets connection email and said, hey, I noticed you're a passive investor. I'd like to chat. And I ignored it for a month because I'm like, I'm not responding to that. It's ridiculous. And then I thought to myself, this is what I do for a living, right? This is my job. So why wouldn't I take 5 minutes and reply and say, yeah, let's chat. And so we chatted, and I liked him. I liked his deals, and I suckered Sean into jumping in with me so I wouldn't have to do it by myself. And I'm thinking about this 3rd deal.
Hey, we just got our first distribution.
Yeah, we did. It was a couple $100, right?
So it's actually legit.
Yeah. And one of the benefits of being the guy connecting people is he's been giving me the $25,000 rookie minimum for every time I bring someone new in. So now that he brought Paul in, he offered me that on this one too, which I wasn't going to do it, but now I'm thinking I might. But I really like the deals because they're pretty much guaranteed with the triple net lease, like Paul talked about, and they're really made to sell off to a REIT at some point. And that's their whole goal. So there's the building.
There we go. Better late than never, right?
Yeah, exactly. So any
Paul,
questions on that?
Yeah, let me just ask a quick question. I was talking with Drew over the weekend because he sent me the deal as well. and I was asking him a bunch of questions. We were going back and forth. And one of the questions that must have got lost in one of my emails to him was on the 2 previous deals that Jim mentioned that we're both in. They got 12 months up front, and they got 4 months up front on this deal. Did he happen to mention that at all?
No, I thought it was a bonus to get the 4, but now I feel like I need to ask for 12.
No, I don't. No, I don't think there's anything wrong with it. I just thought it was interesting that they got 12 on the previous 2, and this one was 4. And the other 2 are a little bit different than this guy. I think this one's a little. You don't have to worry as much about this. It's a smaller deal, so I'm sure the 4 months is fine. I just thought that was about the only thing that didn't line up in all the financials with the other 2 deals.
Huh. Were those other 2 deals subscribed during COVID?
Yeah,
Yes.
and they were bigger deals without an equity partner. I mean, the raise was a lot bigger, so I feel like the 4 months means they have more confidence in this deal.
Right.
And they had an equity partner coming in with a big chunk, and they must have been okay with the 4 months, so they just decided to do it that way. That was my guess. I haven't talked to Drew about that, but I mean, I love the 12 months, but the 4 months these are rock solid leases, and they underwrite. The MAG gets audited financials every quarter from these guys and checks the financials and makes sure they're still on track, and they have. There's something in the contract that they can, I don't know exactly what it is, but that allows them to monitor the financials. So these, I don't think are going to be, there's very little upside on the cash flow. He said, they're targeting 8% in year 1. They're going to get exactly 8%. There's hardly ever any upside. The upside is when you sell it to a REIT down the road. But, on a multifamily, they may have higher rents come in or more collections. So they could have an 8% pref and pay out 12% in year 1 or 2 or whatever, and then you get the appreciation. So this is a little bit less. It's more stable on the upside and downside for during the hold period, and then all you're hoping for is the appreciation on the back end. But if you're going to pay me 8 to 10% for 5 years, and I'm not going to have to pay taxes on it, I'm good with that.
Yeah, and these guys have got. Drew told me there's at least 2 more deals that they're going to go after. And the thing that I like about them is not only are they buttoned up, they know their stuff, but they're going after tenants with long histories. Like these guys are 82 years. Scantron's another one that Jim and I are in, and Scantron's been around since, however long. And then 4 Arrows, one down in Dallas, and those guys have been manufacturing for the defense industry for, 50, 60 years. So it's they go after people that have been around for a long time, which is pretty cool.
Awesome. Any other questions on this? If you do have questions, reach out to Paul or me or Sean, since we're all in the deals. I'm sorry, Steve, we went over a little bit, so you're off the hook, but on the hook for next time. So next time we're going to talk taxes, and so I'm not sure of the date. Because Nate Bush, who's my accountant, and he might be an accountant to a couple people here, I'm not sure, is okay. So he's going to come on and talk about depreciation for syndications, cost segregation for syndications, oil and gas and conservation easements for those with big W-2s, pluses and minuses of IRA investing in syndications, and other. And the other is I'm going to send out an email, but if you guys have tax questions, I'd like them to, pertain to passive investing in syndications. So I'd like to see if there's any other questions people have. You can send them in to me, and I will send them to Nate. And so that'll be hopefully about 45 minutes, and then we'll have Steve for the 15, because I don't understand this partitioned IRR thing, and I was looking forward to learning about it.
I don't know if I do either. No.
Well, we'll find out next time. So I'm looking forward to that. I'll send out this recording to, obviously you guys don't need to watch it since you're here, but I will send that out. Anything else for the good of the group? Questions, comments?
Nate Bush, he's done a fantastic job with my deductions, with my tax returns.
Yeah, he's sharp. He knows his stuff. He's a little bit gruff, I think, perhaps.
He's an animal, man. He's got like 5 kids. He runs his own business, and he's got 40 units that he manages himself.
Yeah. And he's a football coach.
Yeah.
So he's a busy guy, but he'll give us an hour or so, and I just have to schedule this around his busy schedule, especially as we're getting towards fall and perhaps football season. So that'll be the plan, and I'll send out an email once we find a date or a couple of options so we can see what works for everybody. So thank you all for attending, and we will see you next time. Bye, guys.
Thanks, guys.
Thanks, Jim. Bye, guys.
Thanks, Jim.
Thanks, guys.